But for now, the tax cuts seem to be having the intended effect. They are boosting corporate earnings, stoking investment and, in some cases, trickling down to ordinary workers. Stocks keep hitting new record highs, confidence is rising, and nobody sees a recession on the horizon. Democrats in Washington seem to think they are sailing into major gains in the 2018 midterm elections, with a good chance to take control of the House of Representatives, and an outside chance of taking the Senate. This may be delusional. It's not easy to move the needle on the economy, and Trump, for all his bellicose Machiavellianism, is doing it. The economy could be peaking, in fact, just as voters go to the polls in November. The tax cuts won't transform the struggling middle class. Higher earners will get a bigger tax cut, proportionally, than lower earners. And the biggest beneficiaries may be those who own stocks, since stock prices surged in anticipation of the tax cuts, with further gains following the actual enactment of the cuts. Still, the changes occurring in the aftermath of the tax cuts represent real money going to real workers. Goldman Sachs warned recently that investors may overestimate earnings accretion from lower taxes, given much of the benefit will be competed away. Here's what Goldman means: corporations may spend more of the tax windfall raising wages, to keep workers, and cutting prices, to remain competitive. If you're a shareholder, that's a bad thing. But if you're an ordinary person, it's a good thing, because more of the tax savings than expected would benefit workers and consumers. This comes as the job market is strengthening, labor shortages are developing, and larger wage gains seem likely. Moody's Analytics predicts the unemployment rate will fall from 4.1% now to 3.5% this year, which would be the lowest level since 1969. That should finally push wages up in ways workers will feel, with 2018 being an inflection point for wage growth, Moody's Analytics says. The forecasting firm expects wage growth of 3.5% in 2019, which would be the best since the boom year of 2005. The tax cuts will probably never produce the trickle-down windfall some Republicans promised. But they don't really have to, if people feel like they end up better off. It's likely the tax cuts will worsen income inequality, but we won't know that for a while. Meanwhile, voters will vote this coming November based on whether they feel better off under Trump, or not. Democrats might still have a compelling message this year if they run on restoring dignity to government, or bolstering women, or fixing the broken health care system, or reinstating environmental protections. But the economy will not be their issue in 2018, and Democrats claiming the Trump economy stinks will seem as out of touch as all the other politicians Trump has already defeated. Confidential tip line, Rick Newman at News Pulse. Encrypted communication available. Rick Newman is the author of 4 books, including Rebounders, How Winners Pivot from Setback to Success. Follow him on Twitter, at Rick Newman. Follow News Pulse Finance on Facebook, Twitter, Instagram, and LinkedIn.